Back in September, the federal government announced big changes to mortgage rules. One of those new rules came into effect yesterday. It allows first-time home buyers to benefit from extended amortization periods to 30 years from the earlier 25. Let's talk about it now with an expert in terms of what it could mean to home buyers and to the Canadian housing market at large. Phil Soper is a familiar face to viewers of this channel. He's president, of course, and chief executive officer of Royal LePage. Phil, thanks a lot for joining us. Summarize the change for us and who will benefit primarily and by how much?
Yeah, it's really first-time home buyers who have been missing from the real estate market over the last 2.5 years. And these changes are aimed at making it easier for them. Essentially, in cities like Milton or Victoria, British Columbia, there's about 10 principal urban places across the country where the medium home price sits between $1 million and $1.5 million. They will now be able to get mortgage insurance. The other change that affects all people, whether buying new property or resale property, is they'll be able to spread their mortgage over 30 years, making the payments lower in the early stage. Of course, they can take shorter-term mortgages as they get in better financial position and pay off more of their home. But in the beginning, it makes a real difference just to get that mortgage payment lower.
How is there any back-of-the-envelope math that would suggest how much a monthly payment would decline if the amortization is stretched out an additional 5 years?
Well, it's if you take 25 versus 30, we're talking about another 15 to 20% potentially, and we can't forget that interest rates have been moving rapidly lower. That 50 basis point or half percentage point cut we saw in early December on top of the previous cuts to the bank rate are really causing a ripple through the housing market, particularly in our most expensive markets, Southern Ontario, the Lower Mainland, British Columbia. We've seen a huge leap forward in the number of transactions in October and November. And November in particular is not typically a busy month in this industry. Things are winding down for the winter, but it appears that will not be the case in 24-25.
So what is your take on 2025? What kind of year are we going to have in residential real estate?
Well, I think it'll be front-end loaded. Now, the real estate industry's cycle tends to be front-end loaded anyways. We have the busiest time of the year in North America is that late February to June time.
Phil, I'm going to interrupt you. Phil, I'm going to interrupt you. We have breaking news. Finance Minister Chrystia Freeland has resigned from cabinet. That news has just been released. That is obviously enormous news here in the Canadian scene. Chrystia Freeland resigning from cabinet. She has made that statement within the past couple of seconds on the X platform. That's the Twitter platform. We, of course, will follow this news for you. That's all we know right now. But on the day that the fall fiscal update is due in Ottawa at 4 p.m., the finance minister of this country has resigned from cabinet. Let's go back to Phil Soper. Phil, apologies, but I think you'll understand that's extremely important news to bring to our viewers. Continue, Phil, with your view on the 2025 residential real estate market. And to our viewers, we will be following up ASAP on this news from Ottawa.
Maybe just a brief comment on the political implications of a change in government in Ottawa. While the Conservatives and the Liberals have very different policies in many areas, such as taxation, particularly related to climate. On housing, the two major parties in the country have been relatively consistent. So a change in government, I don't believe will have significant implications for housing and real estate in particular.